back on Morning Movers. One Tesla bull is a little less bullish this morning. Morgan Stanley's Adam Jonas said the firm removed its top pick status for the EV maker. Jones said the stock met Morgan Stanley's criteria to remove the designation. He is keeping his overweight rating and a $410 price target on shares. Time now for Options Corner. Joining us to take a deeper look at Tesla is Rick Ducat, the Duke of Data himself, lead market technician here on Schwab Network. All right, let's talk about this chart for Tesla. Look, Tesla has been, kind of pulling up the caboose as it pertains to the Mag 7 this year. So what trends do you notice about this chart, Rick?
The caboose of the Mag 7, as you say, but still leading the broader market as well as its own consumer discretionary sector. Quite a broad sector, though. So to see how Tesla stacks up against the legacy automakers, it's actually doing quite well if you were to look at it from that angle here, up 62% during the past year. GM, Toyota, Ford in the middle of the pack, up between 10 and 23% or so. Meanwhile, Stellantis, so, Jeep, Dodge, those companies, Chrysler, down notably here, down 41%. So I guess it depends on kind of how you look at Tesla and kind of the different thing. The news headlines I'm seeing today, big hype about AI investments, full self-driving, robo-taxis, robots, etc. I guess they sell cars too. But those are the main things that our people are captivated by at this point here. So when we look at our chart, we can see that we have a resistance area potentially here between about 360 and 367. We have our old highs here before our breakout. We have the high point after a breakdown, and the resistance test, again, that we've reached a couple times here. So that would be the breakout zone if you were feeling bullish in this name here. Friday's gain, we did not manage to close above our old highs quite yet here, but we are above our moving averages, and we are on the precipice of that potential breakout area. If we were to look at our standard deviation channels and our volume profile study, we can see we are just on the edge of breaking out of our heavy volume node, this area here, near about 320 to 350 here. So the bulls would need to hold on to this area to break above that ceiling and potentially push here into 390 or so.
Okay, that'll be interesting to watch. Adam Jonas also saying of Morgan Stanley, while the proof is in the execution at face value, the proposed compensation package aligns Tesla minority shareholder interests with those of Elon Musk. That goes to the point about shareholder interests aligned. And so we've seen, some momentum of shares moving higher for Tesla recently. So, Rick, what's the approach for an example trade?
So to think about the next monthly expiration here, we could look at our expected move for the options market, plus minus 7.7%. That gives us a high point of about 381 or so. So this example trade thinks about our two areas that we discussed, 365 and about 380 or so. So the trade in question, an unbalanced call butterfly, +1 September 19th, 365, 375, 380, call butterfly at about a 150 debit or so. It may be a little different once the market opens because the price is moving here, but this would be a bullish trade here, $150 debit paid. Max profit would be this peak here at about 850 here. That would line up with our 375 strike price here. Then it would flatten out once we get above 380. That would equate to a price of about a profit of 350, 850 and 350 there. So this is kind of a modified butterfly here. The strikes are not equidistant apart here. So we've got this sweet spot here where we'd have the max profit. Notice as well, our break-even area is around that 365 area, 366.50 here. Then we would start to taper off here. We would flatten out at around that 380 area. So if we get an above average expected move, a normal butterfly would start to switch back into being unprofitable or losing more money potentially here. But the unbalanced butterfly in this case, then, we would hang on to some of those profits here. We would have this area where we would remain profitable. And it would also be risk defined once again here. So our max loss on this trade would just be the debit paid, that $150 amount that we saw there here. So 11 days to expiration here, a shorter term trade, one looking for a breakout and trying to also focus on the upper edge of that expected move area.
All right. Thank you, Rick. That's Rick Ducat with an example trade there for Tesla. Appreciate it.